Hey guys, Breezy CPA here, your certified AI public accountant. Before we get into the video, make sure to hit the like button. Do it now. You know you're going to like the video. And if you want to see more videos like this in the future, please subscribe. If you're interested in learning more about accounting, taxes, or becoming a CPA, make sure to visit us at breezycpa.com to check out our library of courses. Breezy CPA offers hours of high-quality HD video with searchable scripts that allow you to easily follow along and navigate to your desired point within each lesson. Each course comes with a comprehensive study guide that you can both download and print for easy access on the go. The student dashboard tracks your progress and allows you to easily navigate to each lesson. With a test bank of over 5,000 questions, our patented quiz tracking software helps students identify mistakes and provides detailed solutions and explanations for quick improvements. For a limited time, use promo code BREEZY20 to get 20% off your order. Link in the description box below. Now on to our video. So let's take a look at business structures here. There's a couple different types of business structures, and I want you to take a look at this chart with me because it can get a little confusing as to the different types of structures that are out there and where they're reported and how things are done with them. So let's go through this chart really quick just so you get an understanding. First, we have a sole proprietorship. Now, this is a one-person business, and remember that we looked at Alice Jones and her top tennis business. So she is a sole proprietor. She is the only owner of this business. So any sole proprietor information, any results from the business, the income and the expenses are reported on a person's Schedule C, profit and loss for business, sole proprietorship. So this is a one-person owned business. There's no state filing requirements, so Alice doesn't have to file anything with the state saying I'm starting my sole proprietorship. She can just start it, and then she would file her Schedule C. There's no legal separation between Alice and her personal assets. So whatever's Alice's personal assets and the assets of the business are, they're commingled together. All right? So that means that any personal assets that Alice has are available to pay the debts of this business. So if Top Tennis goes out and buys a bunch of tennis rackets and never pays for them, then the creditor can come and take money from Alice's personal assets to pay off the business debts. Next, let's take a look at general partnership. So what's a general partnership? It's two or more people coming together to try and make a profit for a business. That's a general partnership. There's no state filing required, so Bill and Bob can get together and say, hey, we're going to start a hot dog stand. They don't need to file anything with the state in order to do that. But the tax liabilities are passed through to the partners. So the partner, the general partnership, and the partner's assets are commingled again. So they're commingled because there's no state filing, so there's no separation between the general partnership and the partner's assets. So the personal assets of those partners, just like Alice's personal assets were available to pay any debts of the business, those personal assets of each partner, Bill and Bob, are available to pay any debts that come due as a result of this general partnership. Next, let's look at C corporations. So C corporations report their income and loss on the 1120. This is the U.S. corporate income tax return. So everything from a corporation is reported on this 1120, which we'll go over in corporate taxation, okay? So a C corporation is a separate entity from its owners. So the owners don't have any liability when it comes to the debts of the corporation. All their assets are separate from the corporation. Some of the pros of a corporation is that there can be any number of shareholders, so you can generate capital by issuing shares, and there can be any number of shareholders for a corporation, so that's a bonus. There are procedures to protect shareholder assets. Like I said, the assets of the corporation and the assets of the shareholders are separated. Only the corporate assets are available to creditors. So if the corporation has debt, they haven't paid their debts, and those debt companies come after them, then only the assets of the corporation are available to pay those debts. They wouldn't go after the individual shareholder assets. And lastly, we have LLCs. What I want you to remember about LLCs is that you can be a multi-member LLC, which is a general partnership, or you can be a single member LLC, which is a sole proprietorship. So if you were a one-person LLC, then you would report your LLC information on your Schedule C, sole proprietorship, because you're the only owner. If there's multiple members of the LLC, then they would be reported on Form 1065. Some of the benefits of being an LLC is that there's limited liability for owners. You do have to pay some filing fees to become an LLC, but your personal assets are at much less risk being an LLC as opposed to not being an LLC. All right. So I want you to get a little bit better understanding here of these different business structures, because like I said, it can get confusing. So these are some of the highlights that distinguish a sole proprietorship from a general partnership, a C corporation, an S corporation, and an LLC. So let's take a look at some of these. Owners have a limited liability for debts and obligations of the business. That applies to C corporations, S corporations, and LLCs. Created by filing with the state. You have to file with the state in order to create a C corporation, an S corporation, and an LLC. You don't need to in order to have a general partnership or a sole proprietorship. That's one of the reasons that you don't get this limited liability, because you didn't have to file with the state. Whereas these three did, so they get that limited liability. Can have an indefinite duration. Again, because these three filed with the state, they get this indefinite duration, which doesn't apply to the general partnership or the sole proprietorship. Can have an unlimited number of owners. Again, for a sole proprietorship, we have one owner. You're only allowed to be one owner. Under a general partnership, you can have an unlimited number. Under a C Corp, you can have an unlimited number. Under an S Corp, you have to have less than 100 shareholders in order to qualify as an S Corp. And under an LLC, you can have an unlimited number of shareholders. Both a C Corp and an LLC can be owned by another business. An S Corp can own another business, but they cannot be owned by another business. And that applies to the general partnerships as well as the sole proprietorships. Both a C Corp and an S Corp may issue shares of stock. General partnerships, sole proprietorships, and LLC may not issue shares of stock. Owners report business profit and loss on tax returns. So for a sole proprietorship, you file your Schedule C. A general partnership, you file your 1065. For an S Corp, you file your 1120S. And for an LLC, you file the 1065. Not required to hold annual meetings. A sole proprietorship is not required. A general partnership is not required. But a C Corp and an S Corp do have to hold annual meetings. An LLC also is not required to hold annual meetings. So hopefully these two charts give you a better understanding of the business structure, the differences between a sole proprietorship, a general partnership, a C Corp, an S Corp, and an LLC. If you found this video helpful, please make sure to give it a thumbs up and subscribe for more content. If you're interested in learning more about accounting, taxes, or becoming a CPA, visit us at breezycpa.com for courses. Thanks for watching, and I'll see you guys in the next one.